let's start off by looking at the inflation number out of the US coming in at 0.3%. Everyone had expected 0.2%, so slightly higher. But does this actually mean that the US economy is now heading for inflation?
It's so low that I think it's difficult to actually draw that conclusion. What I think it is saying is that all of a sudden we're starting to see a pickup in demand, and because we're assuming that is demand fed in inflation coming through after many months of seeing absolutely nothing on the horizon. So in fact, I would see that as being moderately positive. I don't think we're looking at anything to get particularly concerned about, and we're going to get lots and lots of these conflicting economic indicators coming out over the next few months.
Interesting, because gold obviously rallied on the back of this news and it rose to $1,151 an ounce, and clearly this is all about inflation fears coming to the fore, and many people are now moving from dollars into equities and of course buying gold quite significantly as well. Where to from here for gold prices?
Look, there are a number of things pushing gold. One, as you say, is the inflation story, but to be honest, I think we'd have to have inflation picking up considerably from these kind of levels.
And what kind of level? Because now it's at 0.3.
Yeah, I mean, I would have thought you'd have to see inflation well into mid-single digits and beyond. And we haven't seen that for a long time in the developed world. Look, it's possible that could happen, but I think we're talking probably some years down the track. Capacity utilization in the States, for example, is still pretty low. There's a long way to go before you start getting inflationary pressures built in from that angle. So I think that's unlikely. The other thing that's pushing it, of course, is the monetary side of things, the currency side of things. And we saw India a week or two ago buying a couple of hundred tons of gold. We're looking at the Chinese talking about possibly diversifying their dollar holdings, this type of thing. So that's probably got more to do with it, I think, in the short term. But the thing with gold is this: once it builds up a momentum of its own, then you get speculators jumping on the bandwagon, and it becomes a self-fulfilling prophecy.
You still haven't answered me. Where do you think gold is headed, Chris?
Probably higher.
Okay, I'm not going to push you on that any further. Also interesting, we had those housing starts falling 10.6%. Now, in my mind, we know that there's a lot of oversupply in the US. So why such disappointment if they're not building many more homes? Obviously, got to get rid of the supply, the current supply, rather than actually getting more homes onto the market.
Yeah, quite a few observers have said, look, don't look at the subprime thing. I mean, that was the catalyst that sparked a lot of this. But in fact, the actual the great bulk of the housing market in the US has over many years become less and less affordable, and you are seeing a lot of distressed sales in the existing stock of housing in the US. So it's not a happy place to be at this point in time. So new housing starts, I think, will probably continue to disappoint in certain areas. If you dig into those numbers and you look at some of the smaller homes, for example, they seem to be going actually quite nicely. So yeah, it's difficult to draw any firm conclusions as to the direction of what's happening in the US on the basis of those numbers specifically.
Well, here at home, we had retail sales out yesterday. The previous reading was a contraction of 7%. We're now contracting by 5.2%. And obviously this number is far worse than what many had expected out there. Chris, were you disappointed?
I actually was. Let me qualify that by saying that I was expecting on a year-on-year basis, and I think we have to differentiate on year-on-year and quarter-on-quarter. I'll come to that in a second. On a year-on-year basis, I think the August figure was restated from -7 to -6.5. This came in at -5.1, -5.2. So it's saying yes, it's grudgingly starting to turn around. If you look at it on a quarter-on-quarter basis, seasonally adjusted, which the guys at Absa Capital are doing, it's interesting. They are definitely seeing a turnaround on a much more high-frequency basis. So it's approaching zero, in fact, on their calculations. So again, I think it's endorsing that view that things are getting less bad, which is perhaps not quite the same thing as getting better as such. But I think what it is reflecting is the fact that the sustained reduction in short-term interest rates is having precious little effect on consumer spending. Anecdotal evidence that I've picked up recently is suggesting that yes, September was a bad month. We expected it not to be that great. October, maybe a little bit better, but not necessarily from a retail sales perspective. What we're seeing, we see the results from Lewis and from JD Group, people seem to be paying off their debts a bit more rapidly. And that seems to be the watchword. They're reducing their debt levels. That's not necessarily the same thing as spending more money in the stores. So the consumer may be getting slightly healthier without necessarily spending more money in the stores.
Okay, we've got SAB releasing results today, and in their updates, of course, just gave in terms of what volumes are looking like, and Africa performing quite well.
Yeah, if you look at those results, in fact, Africa is probably the star performer. It's very much the unsung hero or heroine, whichever way you want to look at it, as far as SAB Miller is concerned. I would argue that if they're going to spend a lot more capex in any geographical jurisdiction over the next few years, Africa probably offers the best returns. It was a bit of a mixed bag. We saw places like Zambia and Mozambique and Uganda actually doing well, whereas we saw Botswana coming off quite considerably because they had this social alcohol levy that they imposed on it. But there are some really great stories coming out of Africa. Bear in mind, we've got 53 countries in Africa, and not all of them are conducive to having just beer thrown at them. That's why SAB has designed this whole what's the word? A combined beverage policy where you get beer, you get water, you get Coca-Cola, that type of thing, and even sorghum beer, and you basically tweak it depending on the jurisdiction that you're in, and it's been very, very clever for them. So I think that's the one area that really stands out. South Africa, unfortunately, we're looking at about -3% volume situation there.
Chris, what's interesting about SAB, it's got exposure to the euro, to the sterling, and of course to the rand as well. And we know there's a lot of issues going around about currencies, and everyone's trying to talk down their currency at this stage. Obviously it's impacting industry quite significantly. What kind of impact do you suspect it'll have on SAB's earnings?
You've put your finger on it. The fact that they're in so many different countries, I've forgotten how many it is, but it's huge, that the currency impact at this point in time is probably going to be relatively benign. If you go back 6 months ago, that wasn't the case, because a lot of their emerging market currencies were taking major strain because they'd been declining against the dollar. But a lot of them have improved significantly in the past few months. So difficult to get a particularly accurate view as to what's happening because of that wide geographical spread.